We've got an update on the Endeavor IPO. We're hearing from the company that Endeavor is postponing its IPO. Earlier, we had reported that sources had said to Dow Jones that it was abandoning the IPO, but it is postponing the IPO, the implication being that the IPO will happen at some later date. But remember, it was expected to begin trading tomorrow. Earlier today, it had already downsized its offering and lowered the range, but we aren't going to get that IPO, at least for now. Moving on, recapping some earlier news out of D.C. that U.S. and China trade talks are now set to resume on October 10th and 11th. Our next guest, though, says do not hold your breath on a trade deal happening. Let's bring in Morgan Creek Capital Management CEO Mark Yusko. Mark, great to have you here on set.
Thanks, Melissa.
Not going to happen at all?
No, look,
ever?
No, never. I mean, I even wore my trade war tie.
Is that
it's
a panda?
Panda on one side, eagle on the other. Little tug of war. Look, there's not going to be a deal. There was a potential deal maybe in the March timeframe, and U.S. backed away from it. That was all that China was going to take. U.S. wants China to admit wrongdoing. There's no chance they're doing that. So there's not going to be a deal. And the real problem that I see, this is a solution without a problem. Even if we announce a deal, what's going to change? Right? Global trade is not going to bounce back. There's not going to be really anything material in the numbers. It's like NAFTA. They changed 3 small things. They put a new name on it. They call it a big deal. It's not a big deal. You know, we're going to make a big deal with North Korea. Buffers, nothing. We're going to make a big deal in the Middle East. Nothing. So there's a lot of talk out of Washington, D.C., not a lot of action. So I think if people are betting that the market's going to rally on a trade deal, sure, they'll be short covering short-term rally, couple days. But long-term, the fundamentals. I love that I'm not the outcast anymore. You guys were all talking earlier about problems with growth and the FANG stocks.
Did you think you were an outcast before? Come on. We never made you think.
No, you didn't make me feel that way. But I mean, there was a lot of bullishness, not here necessarily, but on the market overall.
Yeah.
Look, there's been a lot of ebullience, and I just don't get it.
You still, and fair warning, I mean, people out there might still think you're an outcast after we go over what you think the markets are worth right now. Because you actually think that they're overvalued and the markets would have to fall about 49%.
49 to get to fair value.
Outcast.
No, remember, when we were together.
How do you get to that number?
Well, again, we were together a year ago, right? October a year ago. And you asked me what I thought of the market, and I thought it was 40%, needed a 40% fall to get to fair value. Okay? We're about the same level. The problem is earnings are less good. Earnings have fallen dramatically in the past year. So now the PE ratio is higher, the valuation is higher, the Q ratio is higher. Every measure of valuation is much higher. We're 91%-ish overvalued on a number of indicators. That would take 49% to get to fair value.
Mark, so going back to global trade, let's just say we get some sort of skinny deal that really is just focused on the trade deficit. And I think that is something that we should expect because it's really something that doesn't really take some substantive deal. If tariffs are an enforcement mechanism for a deal, will tariffs come off immediately, in your opinion? And is that one of the reasons why you don't see global trade bouncing back so quickly?
Yeah, again, I think the tariffs are a tax on poor people. So it's a really bad plan. It's always been a bad plan. 2 words, smoot, Hawley. Tariffs have never worked. They're not going to work this time. It's a bad idea. Should they come off? Absolutely, they should come off. They never should have gone on in the first place. The problem is we're still fighting a war in Washington that doesn't exist. It went away 20 years ago. 20 years ago, it was all about made in China, right? We outsourced labor and pollution to China. They sold us cheap goods, and everything that was bought was made in China. My friend's daughter said, I thought you said Santa Claus brings the price. I says, honey, he does. Why? They all say made in China, okay? So now it's not about made in China. It's about made for China. China is going to be the greatest consumer market in history over the next 20 years.
Do they know that?
Oh, I absolutely know that. That's why they're spending on infrastructure.
No, do they know that? I mean, they've been waiting for that to transpire, and it doesn't seem like that has transpired.
Oh, no, it is transpiring. They've taken 60% of their population out of abject poverty over the last 20 years. They've increased the standard of living. Go to Shanghai and see just the huge increase in population that is wealthy and middle class. The middle class is rising at an alarming pace, and all of this quality of life, the import numbers, you talked about the export numbers. They don't care about exporting anymore. It's all about importing. It's all about doing deals to grow consumer, technology, healthcare, consumer. The 5 biggest sectors over the last 50 years in the United States are going to be the 5 biggest sectors in China over the next 50.
Mark, let me ask you, so you have this pretty dire, outcasty kind of prediction. What is going to be the trigger, do you think, to get
well,
that
again,
rolling?
I just said the market's overvalued. The market can stay overvalued a long time, and it has. Remember, a year ago I said it was 40% overvalued. Okay, it went down 20, and it was on its way to correcting. And the way I talked about it was, I said it would fall low single digits last year. It would probably fall double digits this year, a replay of 2001. And then it's 2020 that I'm worried about. That's when the debt bubble pops. Look, corporate debt in this country has doubled.
When you say pops, what do you mean?
Meaning pops. I mean, Enron, WorldCom, bankruptcies.
But what triggers that debt bubble to pop? I mean, is it a recession?
A recession.
Growth.
Yeah.
Okay.
Recession, decline in growth, decline in the export numbers, all the things that we're seeing.
But
right?
last year, though, Mark, wasn't
data.
that bigger issue when rates were going higher, right? So refinancing all that corporate debt at much higher rates had the potential, even in just a smaller pullback in the economy. Now rates are much lower. Is that going to kind of put it off?
50 basis points lower, and they're back where they were before they raised 50 basis points. But my thing is, it's all about growth. And growth is gone. You're seeing it in the big growth names. You're seeing it in the big valuation drops. You're seeing it in IPOs being canceled. You're seeing it on the streets, right? You're seeing not as much traffic. You're seeing not as much tourism. Planes actually have room on them. So when growth slows, debt becomes less serviceable. And I think that's where we're headed. So it doesn't have to be the big, bad, ugly 2008 recession. Remember 2001? First quarter was negative, second quarter was positive, third quarter was negative. Didn't even have two back-to-back negative quarters. Full year was 1%, but it was still a recession. The market still fell 54%, peak to trough. And so I think that's the type of cycle we're in. Now, are we there? The problem with recessions is they're always called ex post, not ex ante. So we could be in a recession, and 6 months from now they call it and say, oh, it started in August, it started in September. I don't know.
Quickly, before we go, Bitcoin was under 8,000 earlier today.
Buy it.
Regardless, though, of the drop. If I said to you Bitcoin dropped to 5,000, you'd say buy it.
Buy it. Because here's the thing. The daily price of Bitcoin doesn't matter. It's been alive for 10 years. In every year, other than one, 2015, it's made a higher low. The market cap has grown every single year. Every fundamental indicator of Bitcoin, usage, wallets, block size, transaction size, number of transactions, every single one, hash rate, making new highs. All of the indicators of the network and the network value are rising. The price of any asset fluctuates. Let's take Amazon. Amazon's been a public company for 20 years. In every year, including this year, it's at a double-digit drawdown. The average peak to trough, minus 31%. Twice, minus 90%. When was the right time to sell? Never. Who's owned it since the IPO to today? Jeff and his mom and dad. That's it.
All right. We're going to leave it there, Mark.
All right,
Good to see you.
thanks
Thank
for
you,
having me.
Mark
Great to be
Yusko,
with
Morgan
you.
Creek Capital,
Outcast.
a.k.a.
Good singers,
Outcast. Mark likes EM.
Well, I tell you, if you have a trade deal of some kind, even a headline, I think you have a dynamic. I actually look at some of the emerging market Asian currencies and I see some downside skew. And I think valuations are extraordinarily interesting. But if we're all talking about growth, and we're all talking about credit issues, I've seen this movie so many times. EM's not going to rally.